What's up, everybody? This is Sunko, the Korean bro. Today is 2023, April 2nd, right? Let's see. Hmm. Uh, this value stock has a surprising tailwind around the corner. Time to buy. Two semiconductor stocks that could join Apple, Amazon, Alphabet, and Microsoft in the $1 trillion club. The 7% yielding dividend has the fuel to keep growing until at least 2030. Hmm. See, the market indicator hasn't been wrong after World War II. Here's where it says stocks are headed. Uh, a bull market is on the way to growth stocks to buy and one to sell. Mm, 5 amazing growth stocks regret not buying on deep. Okay. Let's start with this one. Value stock has surprising tailwind around the corner. Time to buy. Cinet beat estimate and issued better than expected profit guidance for fiscal 2024. The company should benefit from an expected recovery in the engagement jewelry market. The price to earnings ratio of just 7, the stock is a good option for value investors. Hmm. The future holds. Time to buy. Two semiconductors. Stocks that could join Apple, Amazon, Alphabet, and Microsoft in the $1 trillion club. These two cheap giants could be said to join the stock market's most exclusive club. The first billion-dollar company was formed in 1902, and over the following 117 years, the industries that created the most value in the stock market transitioned between steel, car manufacturing, industrial products, and technology. That brings us to 2018 when tech giant Apple became the first company in the world to amass a $1 trillion market capitalization. Mm, Blah, blah, blah. And NVIDIA continues to drive artificial intelligence forward. It's one of the best performing stocks in 2023. With a year-to-date gain of 88%, and it's only April. The company is best known for producing some of the world's most advanced graphics chip used in gaming applications and data centers, but it's quickly gaining recognition as a leader of the artificial intelligence industry as well. NVIDIA has always been a pioneer of AI technology. In fact, 2016, it delivered one of the world's first AI supercomputers to OpenAI, the developer of the ChatGPT online chatbot. Today, OpenAI continues to train its large language models on thousands of NVIDIA's advanced graphics chip. Kathy Wood's Art Invest Management thinks such generative AI models could be $14 trillion revenue opportunity by 2030, with the potential to add $200 trillion in output to the global economy by then. At this stage, NVIDIA is one of the only suppliers of the tools AI developers need to unlock the value. NVIDIA CEO Jensen Huang believes computing hardware is physically limited in its ability to continuously shrink in size while delivering more performance. But thanks to AI software can extract 1000 times more performance from existing hardware. Now NVIDIA will give all business access to the infrastructure necessary to develop a Drive platform is a great example. It's prompting investors to rethink NVIDIA's long-term potential because it's certainly no longer a simple semiconductor producer. It's building the software to match, making it an end-to-end platform computing company. Its Drive platform is a great example. It provides car manufacturers with all the hardware and software needed to implement a fully autonomous self-driving capabilities in their new vehicles. According to Allied Market Research, that alone could be a $2.1 trillion opportunity by 2030. Mm. After the incredible run in Nvidia stock this year, the company is now valued at $684 billion, well on its way to reaching the $1 trillion milestone. And given the substantial opportunities in AI alone, it's quite possible it will get there by the end of the decade. Could lead the high performance computing industry. Mm, okay. Pinterest versus Meta platforms. Pinterest and Meta both face similar headwinds over the past year. Pinterest growth rates are stabilizing, but its margins are still being squeezed by higher marketing costs and creator subsidies. Meta is making some deep cuts to stabilize its margins, but it still needs to prove its investment erosion and reality labs are worthwhile. Okay, Pinterest and Meta platforms are two very different social media companies, right? Pinterest, which served 450 million monthly active users at the end of 2022, carved out a niche market with its virtual pin boards for ideas, interests, and hobbies. Meta, the largest social media company in the world, served 3.74 billion people on a monthly basis across its family of four main apps: Facebook, Messenger, Instagram, and WhatsApp. Both stocks hit their all time highs during their buying frenzy in growth stocks in 2021, but Pinterest and Meta now trade about 70% and 50% respectively below those levels. They both spooked the bulls with their macro and company specific problems. The rising rates exacerbated the pain. Could either of these fallen social media stocks be worth buying again? What happened to Pinterest and Meta? Okay. Pinterest and Meta both generate most of their revenue from ads, which are highly exposed to inflation, rising rates, and other macro headwinds. In addition to slower ad spending, both companies were affected by Apple's iOS update in late 2021, which enabled its users to opt out of data tracking features. The change made it difficult for both platforms to craft targeted ads. Both companies also faced a fierce competition from ByteDance's short video platform TikTok, which serves about 150 million MAUs in the US and more than a billion users worldwide. The more time people spend on TikTok, the less frequently they shared ideas on Pinterest or posted fresh content to Facebook and Instagram. TikTok also challenged Pinterest and Instagram in the nascent social shopping market with shoppable ads. Meta didn't experience a comparable growth spurt during the worst of the pandemic, so it didn't lose any MAUs across its combined family of apps in 2022. But as its core advertising business cooled off, Meta continued to pour billions of dollars into its unprofitable reality lab segment, which houses virtual and augmented reality devices. It also continued to face privacy and antitrust lawsuits from regulators worldwide. Has a brighter future. Pinterest revenue rose 9% to $2.8 billion in 2022, compared to its 52% growth in 2021. While analysts expect its revenue to grow 8% in 2023, the stable outlook can be attributed to its rebounding MAUs, which rose 4% in 2022, its rising average revenue per user in the US and Canada, which still generate much higher revenue per user than its overseas users. However, Pinterest margins are still being squeezed by higher marketing expenses. Mm, More generous subsidies for its top content creators. Pinterest margins are still being squeezed by higher marketing expenses. Mm. are still being squeezed by higher marketing expenses, more generous subsidies for its top content creators, elevated infrastructure costs, the lack of pricing power for its ads. That's why it adjusts earnings before interest, taxes, depreciation, and amortization margin plunged from 32% in 2021 to on the bright side, analysts expect the pressure to ease and for its adjusted EBITDA margin to rise to 17% in 2023. They also expect its adjusted earnings to increase 25%, but based on those expectations, Pinterest stock still look a bit priced at 42 times for earnings. Meta's revenue dipped 1% to $166.6 billion in 2022, decelerating from its 37% growth in 2021 as its earnings per share plunged 38%. Pinterest growth rates are gradually stabilizing, but they could also peak in the near future as it saturates its niche market. The stock is also arguably too pricey relative to its industry peers. Meta faces a lot of long-term near-term challenges, but its diversification, stability, and lower valuation all make it a more compelling investment than Pinterest right now. Okay. The 7% yielding dividend has the fuel to keep growing until at least 2030. In bridge, here's where it says stocks are headed. Stock market corrections in bear markets are more common than most investors realize. Okay. More than a century of data suggests long-term minded investors are smart for putting their money to work right now. Stock market indicator has been infallible for nearly eight decades. In more than 77 years since World War II ended, there have been 13 bear markets. Although there's no rhyme or reason as to how much these 13 bear markets have ultimately declined, there is a well-defined pattern when it comes to bear markets finding a bottom. According to data from Chief U.S. Strategies at Council of Net Values Research, the common theme the previous 12 bear markets shared is they didn't bottom until an official recession was declared by an eight economist panel of the National Bureau of Economic Research. As you can see from the table below, it's taken a median of 5.3 months, an average of nearly 6 months for every bear market after World War II to find its bottom. Since Wall Street tends to be forward looking, it's not surprising the stock market regularly bottoms prior to the end of recession. However, it's also plainly obvious from this data set that investors aren't actually factoring in the short term corporate earnings pain that typically accompanies the recession. The question is how close is the US economy to recession? Recession forecasting tools offer a warning for Wall Street. In order for the above data to be relevant, the US economy would have to officially fall into recession. Based on a couple of recession forecasting tools, there appears to be a growing likelihood of that happening. Arguably, the most followed recession probability tool is the New York Federal Reserve's indicator that analyzes the spread between the 3 month and 10-year Treasury bonds. Hmm. All it requires is patience. There's one number that has provided a virtual guarantee to investors for more than a century, and all it requires is patience. Every year, market analytics company Crashman Research updates the total returns, including dividends, of what an investor would have made had they hypothetically purchased an S&P 500 tracking index at any point since the beginning of 1900 and held for 20 years. Data set is essentially an exercise in using time as an ally. Following its most recent updates, Crashman's two growth stocks to buy and one to sell. Mm. The first stock to buy is Sentinel 1. Okay. Sentinel 1 Snowflake. Okay, let's look at Sentinel 1 Snowflake. Snowflake Data Cloud allows companies to aggregate all of their data in one place, offering them a powerful analytics engine so they can draw maximum value from the information they generate. It's particularly useful for large organizations using multiple providers of cloud services, which create a data silos and hamper visibility. Oh, hello. Oh, that's not really related to uh, the topic that I deal with in this channel. I'll tell you personally when I meet you in person. And it's nothing, serious. If you look at YouTube channel, you'll be able to find it easily. There are a lot of professionals out there, who's more, good at picking up girls. And I'm not really expert in terms of, dating with a girl. So it's a good to see you again in my channel. My main purpose, my main purpose, mm, my main purpose, the reason I do YouTube channel about stock is because um, I want to know how world goes on. Mm. If I read an article about stocks on a daily basis, not on a daily basis, but like I try to read it as often as possible because uh, I can get to know uh, what's up with this word, the biggest trend and like how interest, uh, what's up with interest rate and like, what's up with economic market. Like, so But like if I don't do YouTube, I wouldn't be able to like read that article as often. Because I mean, like it's because of YouTube. I'm like forcing myself to do it. Uh, I hope like that answers your questions. Mm. Yeah, the reason I do it is because I try to get to know. Thank you, thank you, thank you. It's just my one of my hobby. I'm not like well, this has nothing to do with my job, but I do it because it can give me a lot of opportunities. I mean, like language wise, because I can get to read English like a lot, and then I can get to make an opportunity to speak English. Um, but like in my workplace, I hardly use English because I'm currently working as a software engineer. So anyway, I'm like, thank you, mm, thank you for coming by for real. Got the first prize. Got the first prize on what? Yes, exactly. That's right. Yeah. Exactly. The name of competition was IYF speech competition or something. Yeah. I won first prize. At that time, yeah, it was like long time ago. Oh, it's a long time ago. Long time ago. Hmm. Yeah. Energy stocks in Nasdaq. Oh, that's good. That's good. But hmm, CPG. Okay, let me type it and see what that is. Crescent point. Okay, let me see. Crescent point. Crescent point energy. CPG. Okay. It's promising. Okay. Mhm. Mm. Okay. Sector is energy. Current price $706. Revenue $3.07 billion. Okay. Crescent point. Hmm. Promising, marginally safe. $0.48 in 2020. The COVID, but still cheap, I think. Okay. Hmm. Hmm. Stock price has a high correlation with oil price. Okay, okay, okay. Um, the article that I'm looking at is about Crescent Point Energy, and this is mainly written by the author, who seems to be an expert in this area. And he's mm, here it says that he you should buy it because it's promising, like you said. Let me read this for a while and see what this guy says in depth. It says that is an and gas company based in Canada. In 2022, it minimized its capital expenditures, which strengthened its balance sheet. The company increased its base dividend. In addition, it returned around $500 million to its shareholders by paying dividends and buying back stock. For 2023, Crescent Point targets a cash flow of $1 billion, assuming WTI crude prices at $75. CPG stock is trading lower because WTI's crude prices closed below $70 last week. Mm, unfortunately, I don't know much about oil and oil energy, because it's not my field. Because the companies that I put my investment into are most likely like software company, because that's my field. So I know what companies are doing well and like what software services are useful. But like when it comes to energy, I don't know. It's not my field, so I don't know anything about it. But here in this article, this guy is on buy side. Hmm. Well, here he says analysts are much more bullish on Crescent Point Energy court revenues. Okay. Hmm. So, what's your reason? Like, what was the main reason that you bought shares of CPG? Can you share, Sean? And at what price did you buy it? Can you share it too? 6.8, the average price. Let's see. 6.8, okay. A week ago, okay, okay. Hmm, okay. Hmm, not bad. And how long are you going to keep it? Do you have a specific plan? Okay. Because normally when you buy a stock, as far as I know, it's good for you to have a plan. There's gotta be like a access strategy. You can buy it right now, especially with COVID going on. You know, uh, it's you know when to buy, but then a lot of people don't know when to sell. Uh, Sell timing is also important. So like, I wonder if you have a specific plan for it. Uh, like some people just sell it after 5 years or so. You know, if you come up with reason, tell me what it is, because it's really important. You know, Crescent Point Energy Court. Okay, go ahead, take your time. Meanwhile, I'll be reading some article. Take your time, and when the reason comes up, oh yeah, of course, go ahead. Take your time, and if you come up with reason, leave a comment here, and then I'll look at it as soon as you post something. Okay, let's get back to what I was doing. Let me see. Bank of Occidental Petroleum, U.S. Bank of. Um, it's interesting because I mean in the other article, author said that he would buy Meta platform over Pinterest. In this article, this guy suggests that you should buy Pinterest. So, right, the opinion can be different uh, depending on experience that you have, right? So let's see the reason for it. The fifth amazing growth stock you regret not buying the downside bear market deep is the social media company Pinterest. Despite struggling with many of the same advertising concerns that are affecting Alphabet, Pinterest has clear cut competitive advantages in place that allow to thrive. There's no denying that an economic downturn can slow ad spending. However, Pinterest's key performance metrics have continually moved in the right direction over the long periods. The company's monthly active user count has steadily climbed when examined over many years. Perhaps more importantly, Pinterest has managed to increase its average revenue per user no matter what the US and global economy has thrown its way. In spite of last year's economic challenges, ARPU grew by 10% globally, which is a clear indication that advertisers are willing to pay a premium to get their message in front of Pinterest's 450 million MAUs. Hmm. Arguably, the best aspect of Pinterest is its operating model. While most social media companies are reliant on likes and other data tracking tools to help merchants target users with ads, Pinterest's entire premise is built on its users freely and willingly share what interests them. Hmm. This data affords Pinterest a substantial pricing power when dealing with advertisers. If you need one more reason to trust in Pinterest, look at the company's balance sheet. It's ended at 2022 with $2.7 billion in cash, cash equivalents, and marketable securities. This tragic trough gave Pinterest a board the confidence to prove an up to $500 million share repurchase program. Hmm. Let's look at Pinterest. Okay, Pinterest. Its current price is 27.27, and its revenue is keep growing. Mm. And recommendation rating is somewhere between buy and hold. Mm. Mm. And here in this article, even um, it's listed as one of stocks that you should buy during COVID with just $1,000 right now. Hmm. Image search and share design. Image search and share its unique layout, which lends itself into seamless customer journey from searching for an idea or inspiration to purchasing a product that meets that end, has made the platform an ideal vehicle for advertising spending. In the current environment, ad spending remains down as merchants and companies across those sectors are looking to scale back operating costs. A company like Pinterest that makes essentially all its money from advertising is going to feel the brunt of that change. However, these aren't long-term headwinds tied to Pinterest's core business, and ad spending will eventually recover. Pinterest is growing where it matters right now, and its most recent earnings report indicates a steady recovery from the growth deceleration of recent quarters. It's also important to note that even as quarter over quarter and year over year comparisons haven't been ideal for Pinterest recently, the company is still growing at a solid chip from pre-pandemic levels. It also recently returned to profitability. The period starting in the fourth quarter of 2019 and ending in the final quarter of 2022, Pinterest saw its revenue and monthly active users grow at an annualized rate of 30% and 10% respectively. Hmm. Pinterest raked in $70 million in net income in the final quarter of 2022 and closed out the year with 450 million globally. Monthly active users up 4% from 2021. When the cohort that investors should be watching to track Pinterest's growth trajectory, the 2022 earnings call, Pinterest management noted that the ratio of weekly active users to monthly active users reached a record 61%, indicating a high level of user activity. While ad spending is in flux right now, Pinterest is taking active steps to make its interface more attractive both to accomplish buying ad space and people surfing its platform. One area in which Pinterest continues to innovate is in its quantity of video content, which was up 30% in quarter four 2022 on a sequential basis. In fact, 10% of Pinterest user engagement is now derived from video content, and short form video is accounting for 30% of its total revenue. Pinterest improved bottom line and steady revenue and user growth from pre-pandemic levels bode well for its continued recovery in a landscape where more dollars are flowing to ad spending. So, here in this article, the author says that ad spending, mm, people who operate business spend less money on ad spending, especially with COVID going on. Uh, but because of COVID, it's not so good. But then, with inflation, sooner or later, um, it's gonna be less influencer to companies, so it's not gonna affect the business itself. So ad spending will be likely the one that company uh, put their money into more in the coming days. Okay, let's look at something else. Mm, And the one that I'm going to look at is EPAM systems. EPAM systems bar mature app 11. Let's look at app 11. App 11. App 11. Okay. Skyrocketing today. Okay. Why the market had no love for apps? Hmm. Hmm. Ad market remains relatively stable. Hmm. Let's look at this one. Okay, why do you have to buy app 11? Share. Hmm. Let's see. Mobile advertising and app monetization platform provider AppLovin. Stocks gap nicely on its quarter 4 2024 earnings release. AppLovin provides app developers tools and services to grow and monetize their apps with users and advertisers. It also provides analytics and cross promotion opportunities with its network of advertisers. Its core audience is in the video gaming segment, which has been in a slump as normalization continues. Its software platform is experiencing growth at a 24% clip. AppLovin competed with Unity Software and acquired Iron Source, a mobile advertising and monetization platform, which AppLovin had previously attempted to acquire, but lost out to Unity. It also competes with Alphabet, Google, and mobile advertising platform and Meta platforms. Um, the video gaming space has experienced a degradation from waning customer discretionary spending since early 2022. High inflation and rising interest rates have been the leading causes of consumers being more frugal with their discretionary spending. The detrimental effects have been felt by game publishers like Electronic Arts, Roblox, and Take-Two Interactive Software. And since the gaming market is core to AppLovin's top line, the weakness in the sector has impacted AppLovin's top line decline. So here it says inflation and interest has made uh, consumer uh, mm, to be less active in gaming world because uh, consumers and game users hardly spend their money on gaming because economy is not great, right? So they hardly spend their money in that. With that being said, that has affected the business of AppLovin as well, because AppLovin, their main business model um, is that they derive their money from mm, games and like services, because like games company like Electronic Arts, they have to come up with monetization and like uh, ad. But then if a game user hardly spend their money, mm, they wouldn't have any reason for using services provided by AppLovin. That's why. Anyway, um, hmm. Here it says the mobile ad tech company surprised investor with a beat for Unity software. Hmm. Hmm. Operates two main business segments. Business software platform segment provides ad monetization tools for other companies. These services enable developers to integrate ads into their apps. Integrate ads into their apps. Okay. Expanded the segment by acquiring MoPub, and it could be further strengthened if it merges with Unity, which provides a game development engine and integrate advertising services for developers. Unity recently agreed to buy AppLovin and competitor ironSource to strengthen its own struggling advertising platform. Okay, so their AppLovin main competitor is Unity Software. Unity Software recently agreed to buy AppLovin competitor ironSource. Asking Unity to kill that deal and approves its on-solid beat instead. How fast is AppLovin growing? AppLovin's apps business admin primarily hosts first-party games and apps. This portfolio, which house more than 350. How fast is AppLovin growing? Prior to acquiring MoPub and making a play for Unity, AppLovin had already made several acquisitions. As a result, there has been a large gap between its reported and organic growth rates. Wait, hold on. Oh. Hmm. Hmm. Okay. Anyway, okay, it's time to wrap up. Sean, leave a comment in the YouTube video clip. Okay, it's time to go to bed. Yes, wrap up, wrap up. It's too late now. uh, leave a comment and leave your own reason uh in 댓글 uh or somewhere, or you can share with me next time. I do this YouTube thingy uh every now and then. So Come visit next time if you have any chance. You know. Okay. Go to bed. It's late. It's 11:46. Brush your teeth and go to bed. Okay. I'll see you next time. Okay. Bye bye, Sean. Bye bye.